Shares of Salesforce fell last week after the company reported its latest earnings numbers. And so let's take a closer look at if this is a good buying opportunity or if Salesforce stock could fall lower. Here's an overview of its fundamentals. So its earnings and its sales have been rising, but one thing that may be a little bit underwhelming for the company is that its growth rate has been stuck at around 11% for a while, and this is even with Salesforce pumping up its AI-powered CRM. So even despite that, the growth rate isn't terribly good. Now the profit margin is decent. It's been rising. It's expanding from 15% up to about 17% now, most recently. So the profits are good, but the one thing that's concerning is that this is still a really expensive stock in relation to its earnings. It's trading at almost 42 times earnings. Its price to sales multiple at 6. It was closer to its 52-week low recently. It's bounced back as of Friday, but still at the lower end of its range over the past 52 weeks. Its RSI, relative strength index, at about 30, so just right around that oversold threshold. It was recently well into oversold territory, but again, bounced back on Friday, so it dipped above that or climbed above that. Now, as far as its moving average, well below its 20-day moving average, its 50-day, and its 200-day moving average. So it fell sharply. So as you can see here on this chart, it fell down below here. So there's that bit of a bounce back on Friday, but this is the 200-day moving average, so well below that. This is the 20-day and the 50-day, so it's gone well below both of those, all three of those moving averages. For the past months, down 14%, 3 months, 25%, year to date, down around 8%, and over the past 12 months, a positive 12%, but it's been trending lower, and the earnings valuation definitely suggests that it could still be a bit of an expensive stock to buy. The consensus price target from analysts at $292.79. So that does imply there's a bit of upside there. But one thing you need to keep in mind, though, is that these price targets do get adjusted after earnings. And there were some downgrades recently for Salesforce. So that's come down a little bit. And as more analysts update their price targets, that consensus number could fall even lower. So even though it seems like it may have a lot of upside based on that price target, these targets can be a bit misleading and sometimes can get a bit outdated, at least until analysts upgrade their numbers. So overall, in terms of the technicals don't look great right now, just because well below its moving averages. RSI hovering around 30. PE ratio at 42 also suggests it's not a terribly good value buy. And historically, Salesforce has been a fairly expensive stock, but when you're talking at a 42 times earnings multiple and the company's only growing at 11% growth rate, that may be a little bit underwhelming there. And one of the reasons why it's underwhelming is because Salesforce pumps itself up as being the number one AI CRM. And anytime you use a buzz term like AI and try to suggest that you're benefiting from new capabilities, new AI enhanced capabilities, and then your growth rate really isn't taking off despite that, that can leave investors kind of wondering if there's really a payoff there, if that's really happening. Because if you look at their historical numbers here, in terms of the growth rate, Salesforce's growth rate has been declining in previous quarters, so down to about 10.7%, but previously it was up over 15%, even over 20% back in 2022. So its growth rate has been slowing down, and it's been stalling at around 11% recently. So not terribly exciting numbers in that respect. And the big headline on earnings day was that it missed its revenue forecast for the first time since 2006, hence the big plunge. Because anytime a stock is trading at a really high multiple, like 40, 50, 60 times earnings, expectations will be really high to continuously meet their numbers, meet expectations. And so even though revenue grew 11%, the problem is, EPS was good, 2.44 adjusted versus 2.38, but revenue 9.13 versus 9.17. So not a huge miss, but any type of miss, especially again once you're banking off that AI boost and being an AI CRM, people are going to have heightened expectations that you're going to do better than expectations. Another disappointment in terms of the earnings numbers was the forecast for the current quarter. So for the current quarter, the company is expecting 9.25 billion, but analysts expect 9.37 billion in revenue. So another bit of a miss there. So even not just the recent stuff that's been a bit underwhelming, but even the forecast isn't looking that great for Salesforce. So when you factor all that in, even though earnings are better, this is a stock that's still trading at more than 40 times earnings, and it's not posting amazing numbers due to AI, and so it's not getting that boost. And at the same time, if economic conditions slow down and companies scale back on marketing expenditures, CRM related spending, then Salesforce could be vulnerable, and its growth rate has already been declining. And so it wouldn't surprise me if the stock still fell down, just because it's not near its 52-week low yet. Its earnings multiple is still really high. So even though it may seem like a bit of a cheaper stock to buy, Salesforce isn't one that I'd buy today.